our regular look at the financial markets with Investment Director Russ Mould. Russ, how are you?
Very well, Clara. How are you? It's good to see you again.
It's good to see you too.
Pleasure.
Looking a bit different this week,
yeah,
aren't we?
we've dressed down this time, yes. A little bit less formal.
But I have to ask you, how was Ascot?
Enormously pleasurable, thank you. The weather was kind.
Yeah, making a bit of a fuss about that. But what else are we making a fuss about this week?
Well, I think the next week the fuss is all going to be about property, graphics and beer. Now, I know it sounds like a bit of an odd mix, but we've got results coming up from developer St Modwen on the 30th, chip firm Imagination Technologies on the same day, and pubs to restaurant group Greene King on the 1st of July.
Okay, so let's start with bricks and mortar and get stuck into St Modwen, shall we?
Yes, it's a FTSE 250 company and it's a regeneration specialist. In other words, it redevelops brownfield sites. And Tuesday the 30th sees the publication of the company's interim results. Now, a trading statement earlier in June gave us a pretty strong idea that the figures were going to be pretty good. So I guess the full year figures will just be kind of building on that, if you'll pardon the expression. So Chief Executive Bill Oliver stuck to his guidance that pre-tax profits would be, and I quote, significantly above those of the same period a year ago and at a record level. Now, historic net asset value, NAV, reached 325p last year, and that figure should have risen again sharply in the first half, underpinned by St Modwen getting unconditional planning permission for the £2 billion new Covent Garden development at 9 Elms in London. Now, for all of that, the share price, as we can see, is already near 450p. So well above the NAV. The shares have done well, although they have begun to lose just a little bit of momentum. Now, that may be because the shares are already factoring in a bit of good news. They are above the historic NAV, and that lofty premium may be giving people some pause for thought. Still, projects on the go. There's Swansea, there's Birmingham to name but two, and it's got a very broad spread of activities. So with the UK economy seeming to be doing okay, that you'd like to think would possibly give it a bit of a help in the long term too. Yeah,
it sounds like capital growth is the name of the game here, but is there an angle for income hunters?
Well, from an equity perspective, the interim dividend last year was 1.5p, and consensus is looking for an increase, 15 to 20% in the full year payout, but even at sort of 5.5p, that's a dividend yield of around 1%, so it's not thrilling, but do note that St Modwen issued an £80 million retail bond on the London Stock Exchange's order book for retail bonds back in 2012. Now, that 2019 paper was issued with a 6.25% coupon, and even at trading at 107 as it is right now, that's a 4.3% yield to maturity. The chart here shows the price and the yield since issue, and don't forget, just like a share, there's an inverse relationship between the two.
Okay, that's brownfield property done. Should we get into some graphics chips?
Yeah, and in this case, that means Imagination Technologies, another FTSE 250 firm, although in fairness, it is about so much more than just the graphics side. That's probably what it's best known for. It's a semiconductor intellectual property, or semi-IP play, just like big FTSE 100 neighbour ARM. Now, ARM, just the same as ARM, Imagination targets licensing deals and royalty income from its clients, although, unlike ARM, licensing's been a little bit slower than hoped of late. Imagination targets processors, multimedia and communications markets, and the March trading statement, unlike St Modwen's, was a bit lukewarm. The company flagged timing issues with regard to licenses is the issue rather than fundamental demand. That's what management hopes anyway. She will see when Imagination publishes its full year figures on the 30th what the real state of play is. Total royalty units look to be strong, about 1.3 billion, and losses at Pure, the digital business best known for the digital radios, they're expected to come down. Consensus is looking for around a 5% increase in total sales to £179 million. The earnings per share are forecast to go down for the third straight year after a number of trading disappointments, not just the March one. Analysts are, though, looking for a 1/3 increase in profits in the year ahead, which may explain why, as you can see from the chart, the shares have started to rally after what have been a pretty torrid couple of years. Now, rumours of a bid from Apple have never led anywhere, but eager shareholders will doubtless be keeping their ear to the ground, just in case.
Just in case, indeed. And last, but by no means least, beer.
Beer. Yeah, so our third FTSE 250 firm, and it's one of Suffolk's finest, Greene King. Now, it's best known for, Greene King IPA, but also Abbott, Belhaven, and a number of tipples. But the company also owns pub chains, Hungry Horse, is one, and the Loch Fyne seafood restaurants, if you're familiar with those. Now, it's also just bid £377 million for the quoted Spirit Pub Group in a cash and stock deal. Now, the chart shows the shares have just come off their highs, so the full year results come at quite an interesting time on the 1st of July. Consensus is looking for pre-tax profit of £166 million, earnings per share broadly flat, and a slight hike in the dividend to just shy of 30p for a yield around the 3.5% mark. Now, any comment on the sale of 16 spirit pubs to keep the Competition Authority sweet will be of interest, and the integration of that deal is really of long-term interest when it comes to the growth prospects for the company. Consensus is looking for around 6% earnings per share growth in the year that's just begun and 7% to April 2017.
Okay, thank you, Russ.
Absolute pleasure.
And thank you to all of you for joining us. We'll see you next time. Goodbye.